today. Seshadri Sen from Emkay Global is now with us to talk about the way forward for the India market. Seshadri, morning. This is Reema here. First, let's just do a quick recap of Q3. Q3 broadly has been in line with expectations. It's been a bit, a good quarter. But take us through the nitty-gritties, the nuances of what stood out for you, and what's the way forward going to be.
Thanks for hosting me on the show. And yeah, interesting question. I think there's a bit of a trend shift in Q3. While the numbers were very strong, I think the BSE 500 delivered mid-20s earnings growth. The Nifty a little slower, but that's been the case for a while. But the key trend that we spotted was that if you take out separate out the financials, top line growth accelerated slightly. So we've had a slowish top line growth for the BSE 500 for a couple of 2 or 3 quarters now. It moved from 0.1% to 4%. So it's a slight acceleration in the top line growth, still not at desired levels, but it's a slight acceleration nevertheless. On the other hand, the sequential improvement in margins. So post the Ukraine war, we'd seen a correction in margins. And then slowly that was starting to claw back. This is the first time after 2 or 3 quarters where the sequential margins or EBITDA margins for non-financial BSE 500 companies was flat. It's still benefiting from a year-on-year basis, which is why you're seeing despite the low top line growth, very strong PAT growth. But this tells you that this base effect will start to dwindle. And, going forward as we enter FY25, it will be top line growth, which will have to do the heavy lifting as far as earnings growth is concerned.
Okay, so margins have peaked, or does it start trending lower from Q4 itself?
No, I think it'll be stable at these current levels. What happened was that there was a sudden spike in commodity prices, which bank companies failed to pass on immediately. So over time, some of those commodity prices have stabilized, have moderated. Companies have also figured out ways to pass that on. Operating leverage is kicked in a bit. So from here on, I think EBITDA margins will be largely stable. I don't see any significant movements. We'll see what happens to overall demand and commodity prices once the rate cut cycle starts, which we are still penciling in the middle of the year, though there are increasing risks to that assumption. And then maybe, at that point in time, there may be a little more gyrations. But even if commodity prices spike at that point in time, I think top line growth will also be very strong.
By the way, just hang on over there. Finally, you won't have any peace even when you're flying because it's happening. Communication and internet availability, during flight has been launched, and Airtel is introducing those roaming packs now. Tariffs start at 195. Airtel's seen a good recovery from the lows today. Let's pull up the intraday chart on Airtel before we carry on with the conversation. It was down almost 3% in the morning. Now the cut is about 1.5%. Can we get the intraday chart on Airtel, please? Yeah. That's the recovery, considering the rest of the market is under a lot of pressure. But this is, this is how it is. Before I go back to Seshadri and talk to him, this is a bit of a digression. To come back, I was going to ask you about earnings, but slight digression, as I said. Where do you stand on the telecom sector? It's a complete duopoly as of now. But Reliance is not really pure play telecom also. So just what's the thought from here on, considering that companies like Bharti finally have managed to break that 200 barrier on ARPU?
Yeah, longer term, we are constructive on the sector. We are, I think, slightly overweight. It's a very small part of the index, and we are slightly overweight as far, on the sector. ARPUs will over time trend up. It will be choppy. There will be competitive intensity coming into play every now and then, so it will not be a straight line. But I think the major stress is over. The other factor, of course, is CapEx, but I don't think CapEx is also going to be a major destabilizing factor for the stock. So overall, we are constructive. It's not our most favorite sector or top pick that we prefer in general, manufacturing and industrials in those sectors over services. But standalone, we are longer term constructive on communications.
Okay, so that's a telecom. Come back to sort of the broader conversation that we were having. Yesterday we were speaking with Jonathan Garner of Morgan Stanley. Now, they as a house believe that India can keep delivering at least 20% earnings growth for the next 5 years. If we talk slightly longer term, how do you think we'll end FY24, and would you be as optimistic on FY25? And then where does that leave us on the valuation debate, given that we're trading now at what, 19-20 times, which is very close to the long-term averages for the Nifty at least?
Yeah, so our index target for the end of the year is at 90, is at the long-term average. It's not higher than that. 20% for the Nifty on a sustainable basis sounds a little optimistic, if you ask me. We expect mid-teens, 14 to 15%, where consensus is, I think that will largely be achieved as far as the Nifty is concerned. Remember, financials and IT, which form a large part, and consumers, FMCG, which forms a large part of the Nifty weight, are nowhere near 20% on an aggregate basis in terms of sustainable earnings growth. Much of the valuation debates will center around the Nifty, which is large cap heavy. Even this quarter, we saw that the Nifty delivered an unweighted PAT growth of 16%. We really think that 20% for the Nifty is unachievable. Though our thesis from a 2 to 3 year perspective is that small and mid cap, the SMIDs, will outperform the Nifty in terms of earnings growth. So you will find many more companies which cross that 20% hurdle in terms of growth rates if you look at a larger universe, say the BSE 500 or wider. But as far as large cap and Nifty is concerned, we think it will be more like mid-teens. And that itself is a great outcome. Throughout the pre-COVID decade, the Nifty never delivered a sustainable double-digit earnings growth for more than 1 or 2 years at a stretch. So if you get a 3-4 year period where even if it's like low to mid-teen earnings growth and it's consistent, one more factor that we pointed out in our latest note is that the pattern of the consensus earnings starting at X and finishing at X minus Y at the end of the year, that has halted. Consensus earnings stays resilient through the financial year. If these two hold up, if consensus earnings stays resilient and we get a steady mid-teen earnings growth over a 3-4 year period, that's a great outcome. I think that more than justifies the current valuations.
Okay, and one sector which has seen very strong earnings growth this time has been industrial, standout performer. Net sales growth 11.7%, EBITDA growth 26.1%, and an adjusted PAT growth of 29%, according to the Emkay analysis. Seshadri, we'll leave the discussion to some more sectors. Another time. We're out of time today. Thank you very much for joining in. Get into a break. On the other side, we'll be joined by the management of Astra Microwave Products to talk about the Q3 numbers and the recent space FDI policy approved by the government.